Should be live right now. Okay, I'm just gonna do a quick audio test and we'll get started. How's your guys' morning going? I made myself some green tea. I quit coffee like a long time ago. Alright, bet audio works. Let's get to it. Can you hear me now? Okay, so noise something mutes me. What mutes me? Noise gate. Okay. So I'm not gonna use that anymore. What do I use? Expander, editor, noise down. Okay, bet. Bet. Alright, so it's NFP, and right now it's 6:11 a.m. Alright, I'm done doing an audio check. Alright, 6:11 a.m. Why did I say p.m.? And at a non-farm payroll, they just released the numbers. We shot up. Usually, from my experience, this is a Judas swing. Um, I this whole wick is a Judas swing to want traders to think it's going lower and think it's going higher. So at the current moment, I'm just neutral. And if being honest, all I want to do today is just back test and take read. So, okay, yeah, like I said, I want to back test this yesterday. Time I was trying to work OBS and I couldn't get it to work. But hopefully you live, you learn, you know. I get better at setting up the OBS and we'll get these streams live and ready at the appropriate time. I just want to do some annotations at the moment. That's on 15. So, there we go. You can see that right. There's a fair value gap right there. I want just the annotations. I personally, I like the 30-minute fair value gap because of the first and second quarter levels. So I would want to take a picture of that and put in my notes. First, second quarter levels. first, second quarter levels. This would be 0 and 25, 0, 25, and 50. And then, um, sorry, I thought I heard some one outside. Um, yeah, so first quarter levels should be self-explanatory. The only reason I point them out instead of just saying, oh, it's just the quarter levels is because the first and second quarter levels are my key levels. Those are where I want to see institutional sponsorship to whichever direction. So right now, if we were bearish, I would want to see price hit first, second quarter level, then reject, like it did right here. But that doesn't mean we're going bearish. It just means that there's a buy program. This would mean high resistance. And a sell program. This would mean strong institutional sponsorship. So it all depends on the buy and sell program in how I view trading. So don't take what I'm saying for granted. I'm not even profitable yet. I have been studying the markets for 2 years now. I've I've seen a couple things. I've learned a couple things along the way. But yeah, like I said, for me, I look at that. Gotta take a screenshot. Like I said, all I'm doing today is just analyzing the charts, trying to get a read for NFP, and I'm just inviting you guys to study with me. That's all it is. Just imagine we're best friends. We haven't seen each other, both into trading, and we've decided to study together. So I want to read yesterday's price action before I even start looking at today's price action. I just want to note the things, the PD arrays and the ways I would get in, and then do the positive reinforcement on my separate journal and be like, yes, I really enjoyed watching this live, and I, just do that. And, and since it's December, price is trading outside a trading range. That makes it a little hard to trust rallies because usually when there's like price action to the left side, you can see the PD arrays on the left, and you're able to just discern, okay, it wants to go here, and then there's a PD array here. But like when there's no training range, you need to look at the right side of the chart. And so my strategy has been this. Give me a sec. That's been my strategy. So from 21,600 to, sorry, you guys are gonna hate me, but I don't like the little mill. I don't like being off by a tick. I'm a little obsessive. Just a little bit. Just a little bit. Just enough. Okay. So because I don't have a trading range to the left, what I'm using at the moment is the right side, the hard right side of the charts, and I'm looking at the big figure levels. Uh, so how do I go about trading this? Um, Fuck, I'm using like my other monitor. I forget my OBS is connected to this to my laptop. So sorry if you couldn't see that. I'm just gonna move my stuff around. Stop here. Where do I put this? Okay, sorry, bear with me. Use this as a desk. Place this here. Can you still see me? That's my only concern. Oh, yeah, now you can't. Okay. Just let's see. No. Okay, this is going back down to my stool. Okay, whatever. Oh yeah, the way I trade the right side is by putting quadrants at different at different big figure levels. Big to mid figure. So big figure is your 0, 0, 20, 50, 80. And then your mid figure would just be the 5. So 0, 5, 25, 55, 85, and so on. But the way I would trade this is by looking at the institutional sponsorship, right? And by using different sessions. So what I'm referring to that is example. Let's take let's take AM session for example. So AM session, some people say it's 8:30, some people say 9:30. I'm just gonna do 9:30. And there's 12. Alright, so this would be my AM session, and this would be my lunch. Lunch will last till 1. Alright, I'll make this orange. And then 1 would be my PM. There. This would be, that would be my PM session. Yeah, okay. This is how I view the market. And so now Okay, I need to take a picture of this. But what I would write down, yeah, what I would journal would be, yeah, what I would journal would be something like when it, here, I'll just journal and use, I'll read it out loud. Very, so lunch, okay, think about if you're an ICT student, you know how he has macros. It's from 10, it's from 50 to 10, right? Let's say from 9:50 to 10:10. That's a macro. The way I view it is a session is just like a macro, but it's a longer macro than the usual macros. This lunch is a macro to me. It's when people are leaving their desk and they shouldn't start and price should start consolidating, or at least be high resistance. But now let's say AM session is consolidating. When AM session is consolidating, what should I expect? Put away bias, put away the buy or sell program, right? What should I expect after consolidation? Expansion. I don't even know where it's gonna expand. All I need to know is that there's gonna be an expansion move. And if there's an expansion move, I want to be on it. Um, so yeah, that's basically what I'm trying to like put my eyesight to. That's what I look for. That's what has helped me like understand the market. If I take a trade today, I'll elaborate what's going on in my brain, but I doubt that I'm trading for many reasons. One, I'm live streaming. I I two, I'm putting a whole lot more pressure on myself, and three, I'm still just finding consistency on a demo account. There, there's many reasons why I don't want to live stream my trades yet, but I'll try my best to at least do something. All right, I won't disappoint you. I won't disappoint you. Give me a second. I'm very content with seeing AM session consolidate before lunch. Expansion. There we go. That's good, right? But now we got add some more information. We have add how we notice the big figure level. I went here. Um, in my, I just stopped. What the fuck just happened? Oh, I just went offline. You can't hear me anymore. Oh, wait, you can still hear me, but you can't see me. What the? Give me a sec. Okay, no. Kind of froze on me, kind of funny. Oh shit. Okay, sorry about that. I should be flying up. Okay, no, we good now. Should be good now. Okay, yeah, we're good. We're just a little late in at the moment. Is my audio working? Yeah, audio's working. Sorry, guys. Okay, what I want to do now is wait, where was it? Okay, book. So my first year of trading, I was reading this. I was looking at the head and shoulders patterns. I was using um, relative equal highs and lows, to find real support and resistance levels, and I would get crushed. But I've memorized all these patterns. I've even memorized candle wicks, and so the way I would have acknowledged, um, the way I would have like discerned lunch is gonna rally higher instead of go lower. And I know it's gonna sound subjective because look, there's relative equal lows, but it would be these relative equal highs. But what would get me in a long trade is the fact that if this is the fact that how I said AM session was consolidating. I know there's going to be an expansion. I don't need to know if it's going to go lower or higher first because if it takes out these highs, then that's a turtle soup, and then these are drawn on liquidity. And if these are taken out first, then that's a turtle soup. These are my new draw on liquidity. So it really didn't matter to me if price was going to take these highs out first or these lows first. Whichever one was going to be my turtle soup. I know, you're such a hindsight motherfucker. I know, but it's studying. Just study it with me. Because I promise you, I will trade. I don't know when I'm going to trade, but I will trade. And if you just memorize every pattern there is here, you could get an edge that retail traders just don't have. But yeah, highly recommend the book. It's John J. Murphy's book, Technical Analysis of the Financial Markets. Really good read. But in that book, he talks about this relative. Let me just write down. And again, you want to reinforce yourself with positive talk. Like you want to uh, um, give yourself that pat in the back. And I try that. I really try my best to pat myself in the back. It was awesome. Actually, no, I think we could do better. This is where narrative comes into play. It was awesome seeing. It's I'm about to embarrass myself with my spelling, being that it's the equilibrium of Since I know the key levels, I'm just gonna shorten and say 5, 600, and I get it's like so hindsight, but it's just back testing. I'll trade one day. One day I'll trade. It was awesome seeing relatively equal highs be left behind around 21,550, being that it's the equilibrium of 50. Yeah, yeah. So that's the narrative is this. Uh, 21,550 is equilibrium of 500 to 600. The narrative, wait, did I say narrative? The context is this. The narrative is the fact that there's relative equal, the market left relative equal highs at that, at around that level. Um, it was awesome. Yeah. What else can I put? I know I could put so much in this chart. Like I could go and do this. I swear my fingers move. I'm just like trying to be more precise. There we go. I could do that. I could do that. I could measure that. There we go. I could do that. And then I could say something like, yeah, that's one. That's 75. That's 25. That's 0. That was really on the money. Watch bodies close below consequential encouragement of 75%. 75%. Quadrant. I definitely spelled that wrong. Bear with me because I suck at spelling. Really suck at spelling. Hey Siri, spell quadrant.
Quadrant. Quadrant.
Quadrant. Okay. See that. What else do I see? Like I see. Okay, there's that, right? Um, there's more. Because I'm thinking if I was trading this live, what would have how would have I gotten at this? How would have I known price was gonna go here? And how would I have known it was gonna reverse here and go down here? How would I have known? Oh yeah, forgot. The relative equal lows. That's how I would have known. Um, so what did I say? Like I would say something around the lines of it was I had cool here. So fucking cold. I don't have a thermostat in my house, So I'm like fucking freezing, and I don't usually drink caffeinated drinks, and this shit is good. It's like giving me so much energy. But I've quit drinking energy drinks because it spikes up my anxiety, and I feel like a bunch of jitterness in me. You're probably wondering what the fuck are you drinking? Green tea. I know. I'm like the smallest amount of caffeine gets me very anxious. Um, so in case you're wondering why the fuck are you tweaking? I'm not tweaking. I'm just on. I guess you could say I'm tweaking because I'm like on caffeine, but I'm not like a tweaker. Not yet. Like if I lose all my money in the stock market, then I guess I'll take. I'm kidding, but yeah, I have like a very bad relationship with coffee or anything that has caffeine. But I'm not tweaking. I had I had what did I have? I had oh, and I have ADHD, by the way. I don't think I've mentioned that. There we go. I had what did I have? I had a clear read. I had a clear read on price. I had a clear read on price. I had a clear read on price when I saw the highs and lows. What is it? 1 hour. I had a clear read on price when I saw the relatively equal highs and lows. What is that? 15. Okay. Oh shit. How do I bring it back? I had a clear read on price when I saw the relatively equal highs and lows. I'm just gonna draw a line. Lows. This would be my highs. Turn that blue one and make it a little thicker. A little bit more thicker. There we go. Let's make that thicker. Should I put a watermark? I know I'm like getting ahead of myself, but like I don't want to see this on social media and somebody say, "Look what I found. I'm so smart." 'Cause they do that. I've seen it all the time. They don't care. Nobody can imitate me. I had a clear read on price when I saw the relatively equal highs and lows. Wait, but I am looking for the future, so can I make this faint? No, I can't. Fuck. Alright. You know what? Easy. Easy. There we go. That's awesome. Okay, but we got that. So, can you guys see that? Like, be honest, if we were like studying together, like, does this make sense? Like, can you see what I'm seeing? Like I just want to make sure you're able to see what I'm saying, and I'm not like just talking out my ass. Like I am talking out my ass, but at least you could see, right, the relative equal highs, and then you can see the Judah swing higher. Then you can see the way it's respecting consequential encouragement of 75 of the 75 quadrant, and you can see how it goes and takes out the relative equal lows when it took out the relative equal highs first, a signature of a sell model, right? You can see that. All right, I'll take a picture. Take a picture. Let's go put it inside here. There we go. Oh, not that. Oh, wait. Actually, out of respect for Steve Moore, I don't want to show too much, but let's take a screenshot of this. No, not that. Let's take a screenshot. By the way, Steve Moore, um, this guy, his seasonal tendencies are awesome. This guy, he's the man when it comes to seasonal tendencies. Let's go to shit. I'm still alive. Got my reminds. You know what? I downloaded Twitter, right? I'm not gonna download. I'm like uninstalling it because it's toxic. There's nothing useful on Twitter besides porn. That's the only thing I see myself using it, and I've been trying to not watch porn anymore. So I I have no use for it. There's no need for me to go on Twitter anymore. You see it? You see that? Let's just delete, delete. It's gone forever. I fucking hate Twitter. All I get is like toxic notifications of like just fucking the industry for trading has become a competition of who could do it better. And I guess I'm not really adding much to making it less of a competition, but well, it's supposed to be fun, you know. Once you start bringing up you're like somebody's kids, or you start bringing up somebody's family, or you start shit talking somebody else, like come on, you're missing the whole point. Ooh, let's hurry up. Um, yeah, what I want to bring to light is this is Steve Moore seasonal tendencies. They are the best in my opinion. They're awesome. This is the Nasdaq, so this is December 1st. Man, I don't want to give this away, but fuck. Okay. Um, nah, it's too good. I'm sorry. I know. Now I sound like a fucking maniac. Okay. Nah, I'm sorry, guys. It's just way too good to give out for free. Way too good. But yeah. I look at this and fuck, I want to talk about it. Yeah. I look at this. Let's just see where we are. We're on the December 5th. Price should rally. The purple means the last 28. The black is 15. The 5 is red. I mean, black is 15. Red is 5 year. I usually just look at the 5 year and the black one. But do you notice this isn't the thing, by the way. I'm this is common sense. But do you notice how the purple and the red, do you notice how they're trading a lot together? That is a sign of strong institutional sponsorship on a seasonal tendency, right? When when ICT brought this up, see, I'm not taking the credit for it, but when ICT brought this up and I found it in my chart, in my seasonal chart, I was blown away. I was like, dude, I see that. Like I could literally see that. But now, do you see the black one? The black one consolidates. Um, that doesn't really matter because look at the 28 and look at the 5 year. They're aligned, they're in sync. So that means we should expect a high, there's a high probability we might see December 5th rally. And guess what? Guess what, motherfucker? We are rallying and damn. Guess what's going to? 600. But now, what happens if it hits 600? Well, we have 20, right? 20, we have 50, and we have 80, and we also have 70. So what do? I just increase the fifth, but I already have my key levels on my notepad, and I know exactly what I'm looking for. I know what key levels are next, in my opinion. Um, yeah, I know. So we hit that. So next would be, yeah, so my next key level would be obviously 620. Will be 625. That's the key, that's the level I'm looking at. And then apart from that, I'm looking at 680. Yeah. Um, we took a picture of this. Let's delete it. Take it off. Oh, I did. Oh no, I mentioned it. I was gonna say I forgot I mentioned the sessions, but I mentioned them over here. We're fine. I'm still gonna be checking this. Let me ask you, because it took me a while to overcome this, but when you see this right here, right, what you want to get in, you think it's going to go here, and you think if I get in now, it'll hit it. Well, I bet you it's gonna be a tick off. It's gonna be a tick off. It's not gonna hit the red, or it's gonna be 5 handles off. It's gonna retrace. It's gonna create a footprint. And then it's gonna go to the. I refrain from saying what I'm about to say, but it's gonna go somewhere else, and it's going to it's going to trigger you because you're going to want it to go to this level. But guess what? They know that people expect the whole number, expect price to go to round numbers. So they do that bullshit to engineer more liquidity. The more liquidity they're able to engineer, the better odds it's going to go past this level, and it's going to go somewhere between 40 and 60. But I doubt it's going to hit it right away. And if it does, then okay, I was wrong. But usually it doesn't go straight to the key level. But I won't lie, when I see a move like this, it's enticing. But I know that there's um there's going to be a retracement very soon because the second you feel the oh shit I'm missing out, just know it's going to reverse on you. Um, but yeah, that took a long time for me to get over. Um, so we took out 600. I'm still gonna leave this. I'm not just gonna go to 700 now because we've broken out. 600, 5, uh, 575 is also a level. So this is my first and second quarter levels now. When I'm looking at price from here to here, those are my key levels now for retracement. Um, I still want to back test yesterday. Also think about it this way. Well, this is how I think about it. There's a lot of information here. How am I supposed to get in here? I can't get in here without a retracement. miss it. I would need a retracement to get in, and it's definitely not going to go straight to it. And what time is it? It's 9:54. We're about hit 10. Oh shit, would you look at that? Actually, I want to take a picture of that. Five program. Wait, I should really. I know I'm over my head, over myself, but I just want to make sure nobody takes what I've been given. A background I expect. Wait for it. Your mind's about to go. In a by program, I expect first, second quarter levels of the. Wait for it. Wait for it. You're gonna shit yourself. Of the in a Viper, I expect first and second quarter levels of the previous candles. Wait for it. Body to be sensitive. So let's critically think. If I want first and second quarter levels to be sensitive, what if price goes tags 75, or what would that be? 25. What if price tags this? Then we're not in a low resistance liquidity run. We're in a high resistance liquidity run. And buy program. Here, I need actually add that in a low resistance liquidity run. And a low resistance liquidity run. And a buy program I expect first. I expect first and second quarter levels of the previous candle bodies. Bodies range to be sensitive. Oh, how do you spell sensitive? Okay, now that says sensitive. Hey Siri, spell sensitive. This is gonna happen more than once, just letting you know. Hey Siri, spell sensitive. English was not my first language. And for the motherfucker typing, we know. Fuck you. Previous count bodies range to be sensitive. Um, I want to make sure I get the point. There we go. Oh shit. There we go. There we go. No, make that smaller. Yeah, that's nice. That's gonna be a very nice screenshot. And then your next question, if you actually take the time to study of this is going to be, how do you know when it's going to hit 75%? Wait, that should be 25. When do you know it's going to hit the first quarter? Or when is it going to hit the second quarter? It should be kind of obvious when I'll know when it's going to hit um, second quarter and when it's going to hit first quarter. Um, 5 likes, and I'll teach you guys how I know if it's going to go to the first quarter or the second quarter. Yeah, that sounds fair. 5 likes. I don't know if you heard that, but pots just fell. There we go. I got distracted. Oh yeah, look at that. Look at that. What did I say? It's not going to go straight to that level. It's going to engineer some liquidity and then go straight to it. But guess what? It's not just going to tag this. It might go to 40. It might even go to 60. It might go to 50 on the dot. 650 at the dot. But I don't know. I'm not going to be here for that long. I have to go to work. I work at Target. Yeah, I know. It's not that bad though. The atmosphere is bad, but I'm blessed to have a job, and I'm very grateful for my best friend who vouched for me. He got me the job, so shout out to him. There's more I want to do, but I want to see it. Okay, whatever. Let's go back over here. Let's see. I already see a few things. I will need like my other monitors just so I can show you guys what I see. But lately, all I've been doing has been focusing on high and low resistance liquidity runs. It's kind of what I want to focus on. Let's do a 2 hour. Let's do a 1 hour. Let's do about 30 minutes. My laptop's about to die. I might have to end this earlier than I wanted it to end because the second I plug my laptop in, it's going to start glitching. Let's just see. Okay, where should I start? Forgot to put in my journal. There we go. So 14. Let's just write down one scene more. So I want to find the type of liquidity room we're in. Large wicks are actually I think I already have that written in. Secret apps, delta, alpha. What do you guys know about alpha, delta? Wait, what? Alpha, beta, delta, gamma. Is this it? Secret apps? No, that's it. I wrote this down somewhere. I received like a thing on it. Forgot about the large wicks are a signature of a high resistance liquidity liquid exchange of high resistance liquidity. I just need it on the 2 hour. Okay, there we go. Here's large wick. And then what else do I notice? Let's put the fib down here. I went to first, second, fourth level. Where would I want to get in? I would have wanted to get in here. Well, let's say I couldn't get in at 1. I don't know. Let's say hop off charts at 2 p.m. New York time. So that means I would have to look at this chart. Look at this right here. How would I have gotten in? Right? That's the question. How would I have gotten inside this move here or here? I think I would have noticed it right. I would have noticed that right there. My meditation blocks are yellow. Am I still streaming? Yes, I am. Oh shit, every that's not received by video videos. Okay. Let's take it off. Okay, took that off. Yeah, I'm gonna have to end the stream early. That sucks. I'm gonna put this down up here. I'm gonna refresh, and hopefully you guys can still hear me, see and hear me. I think you can. All right, let's just hope for the best. I'm gonna just do this quick one, and I'm get off. Sorry, guys. Well, as long as you can hear me and you can see my screen, I could care less if you can really see me. I'm gonna just continue. Okay, so let's say I hopped on at 2, right? This is 2. Um, yeah, this is 2 p.m. Here's the hour chart. So this is 15. This is 2. How would I have gotten in here? Well, at 2, which is 14, it trades up there. So I would want to use probably this right here. Not precise enough. That right there. And that right there. Maybe not that. How would I have gone inside there? What would have decided to get in? I think, yeah, I see that. This gap right here. That right there would tell me to get in. And it's an inverse fair value gap. That's a mitigation block. What else? So it's fine to have your favorite PD, right? But I want to have them all. This right here is a bullish mitigation block. It's an inverse, and I'd be using it inversely, so I see that right there. I see, I see, what else did I see? Hmm, I see so much. What am I not sure? Okay, I see this. You're probably wondering, like, what are you seeing? Um, that low is, look up here. Wait, yeah, can you even see my fingers? That low right here to that high right there. So look up here. So that low is 516 and 50 ticks. That high is 17. We went above it 2 ticks. That to me is a immediate rebalance. And that's the one I want. I want to acknowledge the immediate rebalances because although people say it's support and resistance, to me it's not support and resistance. To me it's science. It's algorithmic. Uh, and being able to acknowledge it before the fact will help me acknowledge it live. So yeah, from that low up here, I can see that. That's immediate rebalance. So I would use that. Um, I would also acknowledge the inverse mitigation block right here, the blue one. Uh, what else would I acknowledge? I guess I could say a candle wick gap. This is a candle wick gap. Have I talked about this? Oh, you guys gotta go crazy over that one. Um, anything else? What is that? Oh, the new day opening gap. Those I like making red. Yeah. I guess you guys would say, well, this was the most obvious one, right? It is. Actually, I got it wrong. That's that's the opening, and this is the opening of that one. I guess this is a volume imbalance. Oh yeah, that's a volume imbalance inside the new new day opening gap. So let me just turn this. Let's just turn it black. So my new day opening gaps are red. Okay. Yeah, so I guess you could say I would have acknowledged the volume imbalance, and that's how I could gone in at 4. I mean at 2, not 4, at 2 p.m. How would I have gone in at 15? Well, now I need to take a picture though. Okay. Actually, let's just write. Oh, how would I have gone at 15? Mitigation block. That's how. Yeah, mitigation. What would I be aiming for? What would I be aiming for? That low right there. I'm gonna have to this low, and you guys might not see it. Actually, I don't want to bring that up. Never mind. Just that low. I would have just seen that low. And I know it sounds like, dude, you are so full of it. I know, but like, I swear, if I just start showing shit and I start getting at least a little bit of viewership, I know some motherfucker on Twitter is gonna take it. They're gonna claim it for themselves, and it's just fucked up. So I'm not even gonna reveal it, but something over here, maybe here, that you're not able to see, and that nobody has ever talked about. Now I sound like, again, I sound loony, but there is a PDA right there that's discernible. Um, and ICT has not talked about it. None of his students have talked about it. I guess here I am talking about it, but not really. But I will say there is a candlewick gap. That's not the PD array, by the way, but there is a candlewick gap here. I'll reveal that one because already those are stupid. Even it punctures it. These are I like making these that color. Yeah, that's a candlewick gap. If this was here and this was, let's say this was here, that's an inverse candlewick gap. Boom, boom, here, there you go. You're welcome. But that's not the PD array I'm pointing at. Oh, oh, like this right here, candlewick gap. It doesn't go to it. I know. It didn't need to. Another candlewick gap. Institutional order flow entry drill. Boom. It's just so easy. And now you're probably getting mad and you probably want me to see me trade. I'll trade. I'll just give me time. Give me a year. Give me something. Give me some time. But yeah, this is my turtle soup. Uh, it's also liquidity. Again, I know I am full of myself. I am very full of myself. Okay, I'm gonna take this off just to make it cleaner. I'm gonna take that off. Um, we're in a high resistance liquidity run. Large wicks are signature of a high resistance liquidity run. Um, what's the narrative? The narrative would be then viruses when a cell program, like we're in a cell program, therefore, since price is in, therefore, since we're in a high resistance liquidity run, I expect, what should I be expecting? Deep retracements. Make that smaller. Okay. Let's make this bigger. Fuck you guys, it's Twitter. See, I don't care. Let's make me red. That's it. I'm going red. I like red. Oh, you're shooting my dick. No way. Oh shit, my bad. Alright, let me go. That's not bad, right, guys? Okay, my bad. There we go. Alright. Program. Sales and liquidity. Um, what am I thinking of? Sorry, sometimes I just forget what I'm thinking about. And I have to like remind myself what am I thinking about. Because I think about a lot of things. I have a thinking issue at times. Um, let's remove this from a 2 hour. There we go. Let's remove that from the 2 hour so we can see this because that's important. We already mentioned the relative equal lows. How would I get inside here? That I will mention right here at 2 p.m. inside the 12 p.m. candles on the would have same used. I hope this finds some deprofitability. At 2 p.m. inside the 12 p.m. candle body, I would have used inverse. Wait, no. I would have used the volume imbalance and navigation to the what? To the shit. I even forgot. To the It's not the left side of the chart. No. You might think, well, Brian, I mean, you might think, well, look at the left side. It's in the left side, but it's not just the left side. It's the outer left side. Does that make sense? Like, think of this, right? No, this is a 2 hour. I hope, please don't get lost. But this is a 2 hour, right? What's inside of the 2 hour? There's a 1 hour, and then there's a 30 minute. I know that sounds so confusing, but like inside the 2 hour, there's a 1 hour, there's a 30 minute, there's a 15, and then we go all the way to seconds. But in the outer left side would be this right here and beyond. Does that make sense? I hope that made sense. If that didn't make sense, then I'm I don't know, just to explain it. I'm just learning alongside you guys. More like you guys are watching me learn. And if you get anything beneficial out of it, then God bless. At 2 p.m. inside the 12 p.m. candle body, I would have used the volume imbalance and the mitigation to the outer left side. Because sometimes I'm looking at the left side of the chart. Well, I'm not just using, sometimes I'll use the left side, and then sometimes I'll use the outer left side. So there's two types of lefts that I look at, right? Like, does that, yeah, that explains it clear. Yeah, that makes so much sense in my head. Okay. At 2 p.m. inside the 12 p.m. candle's body, I would have used the volume imbalance and the mitigation block to the outer left side. Okay. And then, is there anything I could write here? What can I see down here? Hmm, I guess just for fun, I'll just say you're probably gonna think, look, it didn't hit equilibrium of the candle's range now. But I would be using this candle wick gap. Just gonna pull out so you guys can see it. This candle wick gap of these two. Um, oh fuck. There's another PD. Okay, I'm gonna stop doing that. My bad. But there's a PD array here, a different one, and it's way more precise. Way more precise. Um. Oh, there's an order block. There's an order block right here. Actually, yeah, that's the PD array I'm talking about. So much more precise. Nah. Oh my gosh. Like, some of you might think I'm clowning, and I'm a clown because, bro, you're not even profitable and you're talking about how many PD arrays you can see. I know. I'm not profitable yet. Yet, bro, but let me tell you, I can see shit you can't see, and I think you're just mad. And time will tell if I'm full of talk or I could actually do the walk. And I think I could do the walk, I could do the bark. I mean, I could do the bite, and my bite stings, and my bite lasts for a while. Just give me time. I'm growing into it. You know, I'm gaining my confidence in this field. But I feel like Kobe. I feel like I feel I feel confident, a little cocky, and I'm trying. Actually, in my journal, now that we're in the topic of psychology, um, my journal, what I've been doing, I've I've been rereading. This is it. Oh, I my journal, personal journal, not personal, my trading journal. I do my best to reread my notes, and I analyze myself, and I think critically about myself, and I look at my flaws and I was getting pretty cocky in this. And I was thinking, you don't know the difference between cockiness and confidence, and I had to correct myself. And I try my best not to be cocky because getting cocky means you're getting lazy. Being confident means you're working hard. You're getting somewhere. Uh, so if I do get cocky, I hope not. I actually don't think I will because one, I track myself and I track my trading. So I don't think I'll ever get too cocky, and I don't think I'll ever get too egotistical. But yeah, look at the order block. Precision. Precision. Oh, and the candle wick gap. The reason it's called a candle wick gap is because it's a candle wick gap and not a candle wick that I'm using. Here, top. Let's make that. Okay, I think that's my sign to end the live stream. But from that high to that low, that's a candle wick gap. And then from that high to that low, that's another candle wick gap. And if we just drag this out, We can see it be used here. And we can see that one. And then there's this one right here. They're very, very common in high resistance liquidity runs. There's actually a pattern I've noticed that's left behind. Uh, we'll end it at that pattern because I have to get going before this dies. But the pattern is no, drawing it will just take too long. But it's a pan flute. So have you ever seen a pan flute? How it has like the little spikes down and the spikes up? That's a pattern that's common in high resistance liquidity runs. Like look at this. That's the pan flute. The pan flute. Oh no. Like that low, that low, that low, that low. That's a pan flute, in my opinion. In high resistance liquidity runs, that's what you notice, a pan flute. And then in low resistance liquidity runs, there's no pan flute. It's just a regular flute going lower, like a diagonal, like a straight line, or going higher straight line. That's the way I memorize it. Oh, yeah, there's the order block down here. Oh, what should I already journaled? I already noted that down. I noted the sell side as my draw. Um, is there anything else I need? I already examined what I would use to get in this move. Yeah, I think we're good. On screenshot it. We'll call that a wrap. Actually, let's just see what it's doing. Nice. Nice. Real nice. Alright. Uh, let's call this a wrap. I had fun. Let's do this again next time. I'll see you guys on the next stream. Bye.